and welcome to the Breakfast Club. My name is Darren Hancock, and it is November the 18th, Monday, November the 18th, 2024. And welcome to our show. I hope you all had a great weekend. And once again, ICT is calling for a major crash. Like the false flag is in the air. Today I'm gonna start the show. We're gonna start working from the monthly back, and we're gonna start having a look, because a seasonal tendency, as one of my guys in the channel talked about this morning. Lambo was sent me some information and was talking about it being a seasonal tendency, and it is a seasonal tendency. Usually October, in November, there's a seasonal tendency for a turn in the markets. So let's look at yeah, I think this is an update. I'd like to see us get back into this 287. If we take out this low, we've got a few days of down candles coming. That's the possible ability. So let's have a look at let's start over here on the 1 month. I want to give you guys this kind of view about the month. Let's see where we're sitting here. Taking out that old high there on the monthly candle. Yeah, this could be a sudden drop. Like, this looks like it's going higher, right? Well, we've taken out that high. We have this tremendous turn. I can see why Michael's thinking this could be a big drop right now. We could get weeks of down, at least another few weeks of downward movement now. I'm not going to do the Chicken Little, the sky is falling stuff, but I just want to see technical proof that we're going to go lower. Okay, so this is what I want to see. We must close this week below this level. Yeah, I can see that being the I see weeks of downward running now, you guys. Wow, okay. If we get this upside run today, yeah, if we take out that low, today could be the start. Monday, Tuesday turn. Tuesday could be the high of the week. Even Wednesday. And Thursday starts the move. This is going to be a very interesting week, you guys. A very interesting week indeed. Whew. My wife says this room's always hot here, and but that's fun. All right. Look at ES. I'll come back to NQ. Right now I have a bullish or bearishness on the monthly, the weekly, and daily has a 2 to 3 day up run, I would expect, and then a turn. Let me see. ES. Let's look at the daily on ES. It's already made its turn already. If we get, again, we get the same kind of run back up. We've come down into these two order blocks here nicely. We've even hit the nice clean, ideally my ideal location would be right here on that close of that candle, and we've just hit the close of that candle. That's nice. I know it could be hindsight. That could be, if you watch the show enough, you'll know that that's one of my first objectives I look for when I return to. Once you break out of this, I'm always talking about these two candles. We made a new high and came all the way back to it. So now how we act inside this is important for me. If we do get a retracement, I'd like to see a retracement back into the bottom of this candle, or run back up into this fair value gap. And then, so if you see a couple of days to give you that false idea that we're going to go higher, and then we start to turn. If we start getting through this candle and dig back through on a close through 5802, I know you'd have to give a little bit of wiggle room in there to 5777. Then we're taking out the lows and we're coming deeper into this range. And then all I've got in here is 5631, and then maybe 54. Next couple of days will be interesting. It will be interesting indeed. This could be the seasonal tendency for the turn today or this week. Dow Jones. Let's look at Mr. Jones weekly. Jesus. I could see a huge, if this is a total crash, we're looking at this huge range here. I'm just going to give you a little doomsday prophecy here. If this market crashes, you see what I'm looking at inside this large range? This major drop down and then the expansion. Remember when we had the big COVID drop? And it's been the slow expansion. We'll get a retracement back into this and this. That's like half of the market. If we just see this that's the doomsday prophecy. But until then, there's a multitude of PDRAs it has to pass through in order to get that. Now, I'm not saying it's going there at all. I'm not saying that. I'm just saying, holy smokes, I can see a downside objective if it decided to drop out of the sky. On a weekly basis. Oh, Dow Jones seemed a little more propped up to me. A little more. That's the level we wanted to see support at on a daily basis. We've hit it. Now we're trading below it. So on a weekly basis, I'm looking for 42,923 to 42,718 on Dow Jones. There's nothing there on a weekly basis that would say we're, unless we come right off that now. 43,330 to 1 ish, somewhere in there. 43.30 to 1. Look at that as potential downside. If we lose this, we're coming back into that range here on a weekly basis. See, we've hit that candle's high, or its close, I should say. Usually you want to see it just tap it and go with a wick, not the wick through it, which gives me a belief that we might be pushing lower still inside this range, looking for the consequent encroachment of that big pulled up close candle BISI that we had back in November the 6th. We've now traded below this. We have to take out this low here, start getting back down deeper. So if we run back up into these little imbalances that we have sitting up here, line in the sand is the mean threshold of this candle. But I like the fact we've closed below here now. So anywhere back up inside here, from here to here, with the little wiggle room and your mean threshold as a stop loss would be up here. So you really want this in a premium to sell at a discount in case you're wrong. If it closes above, comes back down to you, then you know you're in the, look at the range here. You want to get back over 50% at least before you consider going shorter on that. And don't forget, this could be your bull trap or bear trap. You You've got to get through these two candles on the downside close, break structure here to start getting back into a deeper range like 43, 53, 4. My light keeps coming on and off up there. You got like ghosts in the house or something. Yeah. So that be that. Where's my that's Mr. Jones. See how you're right in the middle of that whole bigger range here? Right in the equilibrium of that whole range. We're getting a reaction off of it. So how we act inside here. If we do close above that, then you're looking for this fair value gap here and that imbalance. Include that whole thing in your analysis. We did get a reaction off that the other day when we looked at this level, and that candle's high and close. And look, we hit right off the top of the high, and we just 50% of that wick. We did not even hit the close, so that's good. And we've had a bit of a reaction off of that, so I'd like to see that not just come back and tap this and roll over and come back down again. You want to see a portion of this gap stay open. If you really want to see this start accelerating now, it's got to get back up in here, this level right here. For UNG. For the natural gas thing. Pre-market's already 1343. Copper is on the way back down. It's sitting flat. Crude oil. Looking to go lower. Let's see these relative equal lows get taken out. Yeah. I'd like to see it freeze off of here right now. Turn around and come back down. Start giving us this. If we do end up clearing out this candle on the upside, 70.43, 70.36, 70.43 is the upside. We could get a revisit at this fair value gap here in that order block. If we take through this candle, but you want to see this close above here on a high. We'll get to oil it again in a minute. NASDAQ. Or natural gas. Came back to that level we're looking at. And now you want to see it react off that. So we're stuck inside this right now. We've got to get above here to go higher. Gold, I'll talk about that in a second. Real estate. And those guys, not so good. Wheat. So we've had no lows taken yet. Coming back into the consolidation, CAM Model 1, I'd like to see this hold price here and start reversing, coming back down, taking this out here. You see how we've taken all of this out, and there's a little gap right here. There's a little sibby. We've already closed above it on Friday. Today, you want to see that open, come down, hit this, run back up into 50%, no more than 50% of that range, roll over and come back down again. So you're into a premium of this range here. I do like the fact we've hit this candle off the bottom. I'd like to see that just start reversing now. It's a CAM 1 model entry. CAM 2 would be up in around 569, somewhere around there. You CAM model people, you know the measurements, you know how to line it all up. Yeah, I don't want to see a candle get above here now. I don't want to see a close up here. Cam 1 is ideally where I want to see wheat go. Soybeans, we've got a nice reaction off of here. This is beautiful. This is a nice continuation to take out these lows. So I'm looking for soybeans to go lower. Sugar. Sugar is sweet. I'm looking for sugar to go higher. Take out this little box I've got for you here. Close above that today. And then I'll tell you more tomorrow. I'd like to see the further upside today. Take this consequent encroachment and the top of this candle and start getting up into 22, 20, 22, 24, somewhere up there. So another 20 cents or more. Ooh, coffee. While I think of coffee, let's have a coffee. Coffee got nothing for you in coffee right now. Mean threshold or consequent encroachment of this wick hasn't been broken. The wicks took them, but the bodies are still respecting that 50%. So we could see some bearishness on coffee for a bit. Take out these lows. Look for 283. If you get below 283, look for 281 to 280 on the downside. I'll be looking for a box in there somewhere. For coffee, live cattle. So next objective is 182.20, 182.15. That's the next objective there on the downside. If that holds price and goes higher, I like that. If we dig through that on a close, look for 181.35, and then this imbalance. So from here to here, pull the consequent encroachment from there to there, and look for the consequent encroachment of that, and then look for a fill of this, and then my final downside objective, and then we'll find out whether or not the range is going to extend or pull back into this range here. But that's my ultimate downside objective. We got a bunch of PD arrays to reach for first before we get there. We may see a reaction, like I say, off this 182.25 and then start going higher. So we're in a place where it's bearish right now, downside objective. We have all of this in here. It's high, it's consequent encroachment, and it's low. With the price imbalance, this is all a big magnet or drawn liquidity here. And then I have to put these boxes in here as well. Downside objectives. Get through that one. This is on to next. Layered objectives. And that's live cattle. Keep in mind, we can reverse and go back up higher if we play off this candle's open or wick, which puts us right in that imbalance. We could just come back to the imbalance, fill it, go higher. Cocoa off the breaker. Consequent encroachment of the breaker. We've closed below, or is this today's? This is today's. So if we close below this level right now, which I don't think we're going to do, we have to come back into a deeper range. Oof, yeah. We could come back into this whole imbalance right here. I do not want to see it get below. There. If it gets below that, then we're digging really deep down into this little imbalance here, or this little, I don't know why I keep calling it imbalance. I got imbalance in my head. This little swing point here. That's cocoa. Lumber, still looking for lumber to go higher. This is nice. Institutional order flow entry drill right here off this fair value gap, higher, came back, reclaimed this mean threshold of this candle and went higher. Actually dropped, opened at the open of this candle to come back, revisited the open of that candle or the bottom of the fair value gap twice and went higher. So we're looking for this to take out the highs. And lean piggies, little piggies. What do we got? Some more downside to 78.12, 78 or 77.82. Bottom of that gap again. We'll see how we react off that. See if we use that to go lower. Oil. Yeah, we're right in there now. We've got $68.05 to $68.39. We're right up in here. So we'd have to get through 68.36, 38 to get through that. Oh, that's the same one. It's the hourly. You want to see this get taken on the upside if you want to go higher. If not, this is our next little downward run. This should be the return. And then we're looking for, we got to get through 68.17 on a close. To go any lower. Yeah, look for 68.38. If we touch that, see if that closes above it. I wouldn't want to see wicks getting through this. This has to be one of those touch and goes right at 68.38 there for oil. I'll get rid of all my trades off of here. Gold, nice. Gold's giving you a nice reversal right now. Beautiful. I'd even take a sell right there. I don't know why I'm going with 10 again. I have to start cutting that down. I don't want to go 10, we'll go 5. From now on, it's going to be a big one. So I'm looking right there. And I want to see this start taking out these lows here. Start digging into this range here. This is a nice little return. We have a break-in market structure to the downside. Traded below here, traded back up into it, and now we're looking for lower prices. Look at that. What we call Bitcoin. Bing! Hit it perfectly, and look at that nice little kick off of here. We've had a drop below this low. There's your fair value gap. There's the swing. Taking out that candle. We came back inside it. Right there. Opened, dropped lower. I want to see it take out. We're right. So we come back, revisit. I do not want to see it get above here on a close. If it does, you've got this whole, it could run all the way back up to this imbalance. Sorry, see, I said it again, imbalance. This consolidation, and then see if we get reaction off of that to go lower. If not, if we close above here, then we're obviously going to take these highs and run back for these highs here. Right now it looks bearish. And I want to see it get down into 88.7 to 89.5.7. That's what I'd like to see it get down to. We've taken out these highs. We don't have a reversal yet. So all we could have is just another step up higher. Keep your eyes on this level here. And if it does take out that on a close, we're looking for a run back inside this range here, like 50%. When I was on my show this weekend, I did that video this weekend. I was going through a bunch of different assets to prove my long studied theory of time in a bottle. Remember this, when we're looking about this silver gold, and I was talking about this level right here, that I had to hold that level, had to hold price, and look, held price, and now it's dropped. So now again, you want to see that. I like that wick that we had off of that. I'd like to see this open, come back, just tap here and start running lower, aiming for this downside objective in this AYA, silver, gold, whatever. That's what I'd like to see. And that's all our number stuff this week. I tell you, that stuff was magical. I really enjoyed doing that this weekend and proving this point out on all time frames. It's like I mentioned before, if you've got a theory about what you think the algorithm's doing, if you can't prove it out on all time frames and all asset classes, I don't think, personally, I don't think that you've got a solid thing. Like, I remember those people that were calling that 90-second or 90-minute cycle, and they were trying to prove out a 90-minute cycle. I think, okay, great, now prove it out on all time frames, all asset classes, and tell me if it works. Like, how do you prove that 90 base on a minute? They based it on a minute cycle. How would that work on a daily? If it doesn't, then it's not something specific to all. It's not algorithmic enough for me. No, there might be some truth to it. I don't know. I haven't studied it. Not shooting it down. I just like to know if you can prove it on all time frames, which is what the whole premise of my time in a bottle was all about. Took me a long time to figure that out. But it's all available to you folks for free. I still have more work to do on it. Its application and how to apply the trade strategy with it, because I've changed up my trade strategy lately, or in the last 6 months at least. So using that to implement it with this new setup I got is going to be fun. Anyway, that's my basic analysis of all the multiple things that are going on this morning in the markets. Let's say hello to everybody here this morning. Who is with us this morning? Just waiting, loading. It takes me a while. I got to get through the commercials and stuff. The ads. 27 people with us this morning. Welcome all 27 of you. Still haven't come on there yet. It takes a while to load in all the... There we go. Oh, there's a bunch in there already. Morning, Hadi, Craig, Campione, Russell. Good morning, buddy. Derek, good morning. How's it looking this morning? Dave Barry, good morning. Fiddlesticks. Good morning, RS. Ollie. Nice video today. Now we understand the dots. Yes, you do. You have the secrets, and you have the secret all the way to the monthly, my friends. You have the secret of the seasonal tendencies. It's all in there. You'll start to see, if you study it enough, you'll start to see how it'll go down to your Asian range, your New York range, your afternoon macros. It all starts to become a little clearer when you've got the dots and you've got turn points that you're expecting candles to turn on. Then you can we just need to get my buddy Tristan. When Tristan comes in here, I have to ask him if he can build us an indicator that just, all I want, anybody out there can build me an indicator that marks time and just puts a little number above here, or even just lay it flat along the bottom here so it doesn't crowd up the charts too much, but just put the numbers along the bottom that lines up with whatever candle we're on. Because I don't honestly count the candles all the time. I've got my setup now that I use, and the candle counting is usually used on a daily basis to give me my daily bias. But as you can see, it's accurate all the way down to a minute chart. You can go to a second chart and try it out on there as well. You'll see that it works. So yeah, if we have an indicator that could build me a counter along the bottom here, or on the top, or above each candle, I don't care. You can put it on a separate chart so that it's just counting the candles for you. So you can say, I'm expecting a turn here at this next candle. Then you say, does that line up with my reversal situation that I got here? Do I expect to see this candle turn? Because this is candle 10. Remember 9-10? It ends the bottom of a run and then starts a new run. So this is 11. And then 12 should start the next reversal. So if we get 10, 11 come up into here, and 12 hits this, creates a new little swing point. Remember, 12 makes a swing, 12, and then 13, 14, 15, 16. So all those runs are starting to think about downward run now. Or if we take it out here on the upside, we're looking for a continuation. So if 12 doesn't give us a swing, then 13, 14 keeps climbing, then you think 15, 16, 17 are going to be up here somewhere on a daily chart, right? Just a theory. So let's see if it works out. This is now doing it live. All that hindsight's fine and dandy, right? Let's see if it works for live. And I'm just basing that off the beginning of the month. So 31st. Wait a second. I have a specific rule about a 30-31 candle day. Mm. It lines up better. I don't know if I mentioned it in the video last night about a 30 day and a 31-day month. That extra day gives you your 21. That's your 21 turn. That's your 16, 17 turn. Then 0, 1, 2, 3. 2 is your turn. 4, 5, 6, 7 is your turn. 8, 9, 10, 11. This could be 12 to give us this downward run today. And then the reverse. 13, 14, 15, 16 could be up days. If this rolls over today and then doesn't give us a swing, we could be running lower and lower and lower. If we blow through here, then we're running lower and lower and lower. So if we take it from just straight at the beginning of the month, like I showed you at 0, 1, 2, 3, 4, 5, 6, 7, 8. See how it throws it off? 6 is not here. Whereas if I do the 21 is done, as soon as you hit the 21st day, the swing day, then you go into the next month. And if it's 30 days, you leave the last candle as the 0, 0 candle. Start the next one. 1, 2, 3, 4, 5, 6, 7 is the turn. 8, 9, 10. Is that right? 7, 8, 9, 10, 11, 12. If we start that as 0. If we were on here, this would be 0, 0, 1, 2, 3, 4, 5, 6. So 5 is your turn. 6, 7, 8, 9, 10 is the turn. 11, and then 12 up into here. So today, I need to see what happens with today's candle, Monday. Okay. Hey, Barry, good morning. Craig. My Friday long crude went green today. Excellent. Your Friday long went green. Yeah, be careful of that upside objective with this candle in here already. You're just coming back to revisit this one. Here's our swing. We trade below, come back inside. That's right there. Trade below it, come back inside this candle's wick right now. We come back inside it. One more time inside it, drop down. And now we're back inside it again after cleaning out the highs here. So you really want to see this get some gangbusters now, start getting up above here and eat through this level here, Craig, for a further upside. Good morning on John's alternate account today. Pepe. Happy. Dave Barry, I still need to watch the video. Yeah, I'd like to get your feedback on it. I only want positive feedback, whether you like it, don't like it, that's fine. If you're not sure, just say, look, Ann, sounds interesting, I'm not sure. I just don't want to see people trash and something. You're not going to change my mind on it. So if you've got constructive feedback, I'd love to hear it. If you can think about how you can apply your trade model to that video, by all means, let me know. If you want to share it. If you don't want to share it, I know some people are like, you know, this is top secret squirrel stuff. I'm not giving away my best secrets. I don't care. If it works for me and can work for you, then let it work for you. I don't have to make money on it. I'm going to make money on it my way. So why not share it with other people? That's what I say. You making money is not going to affect me. It's going to make me happy, actually, if you make money. And demo money, of course. Bitcoin's on a bit of a turn again. We're back inside that level. We just tapped that fair value gap above us. We haven't closed above that level yet. We just tapped into this. I like that. I like that fact that we're back into the consequent encroachment of the SIBI here. And we're kicking off of that. I'd like to see that start coming back down lower now. Making that big ad money. You know how much money I've made off of this show after 294 videos? 20 bucks. I haven't made it yet. That's all I've got. 20 bucks. So if people want to begrudge me 20 bucks in ad revenue, so be it. But I'm not in it for the ad revenue, clearly. Yeah, back to the video. If you got some good feedback and you've got something, a way to hone it, give me some ideas. And you bounce your ideas off me, man. We might be able to make something collaboratively, make it a better project. That's why I kind of give it to the community, because there's a lot of genius minds in there, younger than me, can think faster than me. And if you all have an opportunity to see it, and all it's going to take is that one person to look at that and go, man, I can see how that works. And now with this specific trade model that I use, it works beautifully. It works beautifully. It works great. Or at least it gives me a little bit more confidence to estimate where the run's going to go for the day or the week or wherever, right? So yeah, if you got it, share it. If you want to hoard it to yourself, you're the only one that knows. You're the only one that knows. So Greg, run baby run, stop out green. Zach, good morning. Tiny first initial fair value gap. Oh, I'm on the daily there still. Let me go into this 1 minute chart. Now when you look at those dots, you'll see those dots in a totally different way, right? So this dot here is actually supposed to be on top, marking the top. I never did get Craig's, or not Craig, Tristan's updated model. He gave me a little triangle so I could put it at the top of that thing. But anyway, that one marks the top right there. And it also look where that time and price. See how if you're aiming for an upside objective in the premium array, the first premium array above our level here, there you want to see that come back and tap that to go long, short, all the way from here to that first fair value gap. Right at that time, you're looking at saying, ooh, it's coming up now. This is great. If we can hit that level at the 40 candle, oh, look at that, 40 runs right into it, take it short from there. Just 40 is your confirmation that that's your objective would have been anyway. And you expect a turn to occur at 40. Inside that, can you see how we can start adding it as a powerful tool to determine whether or not you expect price? If I was going to expect price to turn, I'd expect it to turn in the next minute, and I'd expect it to turn inside here. You see how you can start to use those numbers to your advantage, right? And here's this one's supposed to be on the bottom here, creating that swing at 42. See? That's 45. Continue down into 48. There's 48 reverse, 49, 50, 51. Now, when you get into the last 10 minutes of the hour, that's where it can sit back and forth and then start to run. So we got our 50, our macro beginning at 50. So we've taken out a low. We've got a reversal here. And this is 49, and here's 50 right here. So I'd like to have seen 49 come up here and 50 to come back down into this range right in there. The fact that what we do is just come back up into this spot on 50. 50, 52. So we should see these next couple of candles either going higher, or if they're going to roll over, and the second one will continue taking that low out here, that not being broken to the upside, right? There's 50. Does the size of the first fair value gap matter? No, it does not. No. Housing news at 10. Medium important, I think. I'll watch it later. Oh, I'm not offended, Russell. Don't worry. Not at all, buddy. I like a good ribbing like anybody. Do. What are we sitting at here? Bitcoin's going to keep coming lower now. As anticipated, we're sitting right 920. I don't know why I want to see Bitcoin come down. British pound, what's that up to? $125.37 to 125.18. British pound downside. If you're into the pound. Wow. $52 makes the high. Change of direction. Back into the order block. Look for 504. For 492. Yeah, it's a little tiny fella, huh? Right there. Well, it's a volume imbalance. This is Monday's fair value gap at 941. No, that doesn't make sense. What's going on, Tristan? It's right there. It's a little tiny fella. 40, 41. No, it shouldn't be inside that one. 40 to 41, you can't count. It's got to be 41 or greater, right? 42. What is this? That's not lining up right there. Tristan, if Tristan's around. That one's not lining up just right. The 934 would be right there. Is 931. 932. Yeah, that's it right there. That volume imbalance is actually the first presentation, not this one. So you see this one come down now. Remember the end of a run, 55, end of the run. Should see the next few candles coming down or back and forth. Could be just coming down now. That's the end of that 55, 56 now. So you got 58. We're looking for 58 for the start of a new run or the end of a bottom. We're looking down in here, so you're looking for that 58, and then 002. Next few minutes, you can see that waffling around in here. You still got till 10 o'clock now. So if we come down and just dip into here, and then you start to see a reaction back up into this range again, and we start to pull back up into here, then we're looking for 572. And then there's a couple of more little ones above. So just keep your eyes on the dots now in the next, those of you who watch the video, you can start to utilize them and see them in a different light now. Because what do we say happens at 9:10? There's 9 on the hour. 9 o'clock, 9, and now 10. So we have 9 o'clock reversal, potentially 10 o'clock reversal. And then you've got the 12 and 16, 17. It's not the 9:10 on the hourly in terms of you go back to 00. Oh yeah, I guess it would be. No. Yeah, definitely not. That goes for midnight, right? There's 58. You see that come down some more. Or if we continue on the upside now that we've hit that box at 504 to 492, we're well inside that now at 500. If we get a continuation from there, look for inside this range and right back up into here at 55. 2. Here's your 10 o'clock. See how we've traded above here already? Come back inside it. Looking for a further run up. Yeah, so I took a short or took a long there off this candle, going long, and I've already moved into break even inside that range, looking for this upside objective here. Inside that range now, 50% for your fib tool inside here. If you're using your fib tool method, bingo, done. That just took me out right there inside that. Oh, it's different on my micro level. If you looked at the micro one, there's an imbalance, or there's a BISI right here. That's where I put my objective, and I just hit it right there. So that's me out. For you guys looking at this level right in here to see if we get that, and there's right there. Just hit it. Now let's see if we can get through that. Go longer. Yes, I do have an indicator for the numbers. Tristan built that for us, but I don't think it's public anymore. I call it magic numbers, but it's in my personal one right here. I might have to get Tristan to do some modifications to that for us. So next objective is right here, inside 572 to 567. Just hit it right there. So if we did start this on the beginning of the month, so 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and 12 should take us up higher, or continuation on the downside. We'll watch how this candle finishes on the daily, and I'd like to see that get right back. An upside objective would obviously be this small imbalance that we have here on the daily, the high of the fair value gap, BISI, the imbalance, and that fair value gap above you. And there's a small imbalance. So, you know, the next 2 days, I'd like to see upward candles. Keep moving. Mine is correct. I would delete the indicator and get his current one. Does he have a current one? Search. What's he calling it? Is he calling it magic numbers? I just changed the name of it. Is it magic numbers? Magic. What's Tristan calling it now? No. I don't know what Tristan's calling it right now. What's he calling it, Dave? Oh, the 931. He hasn't upgraded it. That's just taking out that high there now. See that? It's like one handle above. Watch this level here. Right to the high. I love the way when you look at this regular trading hours gap, they leave that last little portion open. Like Michael talks about, you like to see how it just comes down, doesn't give you a complete fill, and ends up leaving. Gets above this level that we talked about this morning, starts marching higher. All right. All right. I'm long off of here again. I got that weekly fair value gap above us, inversion fair value gap again. If we get through that, we're looking for higher prices. Again, we're looking for an upside objective here today. You're looking for your silver bullet entry. Silver bullet, looking for higher prices. If we take out this candle's low, and we take this candle out here, the first indication is if we close below here, and take that candle and use that candle to get deeper into this range, and we're stuck inside this range some more before either going higher, and we'd have to take out 523 to go lower. Let me delete this one then and look for the new one. This is the newest one, I would gather. Oops. That again. What else we got here? Oh, did I get his current one? Did that. Thanks, Dave. Witness Mags. Hello, Darren. Is this indicator available for the public use? If so, how do I get it? I don't think it's available for public consumption just yet. I will talk to Tristan about it, and there's a couple of modifications I'd like to see him make for it, and then for sure we'll put it up there for you guys to use. There's a couple of things I want to add to it. I want to add numbers for daily, hourly, and 1 minute. I like those ones. The hourly's a nice pivotal level one. So tune into our Telegram channel. Like, pop into the Telegram channel, stay current in there, in the chats, and once we get a hold of Tristan, then you guys will know first before everybody else when it's available. Morning, Hans. See, I gotta watch out with the micros. They're different. Already, thanks, Dave. Not the magic numbers, but the 931. Yeah. I got you, Dave. Thanks. Mm-hmm. Mm-hmm. Oh my, I just turned my back for a second. Look at that. I'm just going to move my stop loss into some profits here. Okay. So I don't want to see it start taking out this low here and this low. Ideally this one, long term this one. So we can come back inside that weekly fair value gap we talked about. So I'm looking for continuation today, further upside. I'm going to let this one sit today and see if I can let this ride. I'm in profit now, so I don't care what it does. I'd love to see it continue falling, finishing up here. That'd be like a 300 handle day. That gets to where the objective is. On a 15-second chart, look what's happening on a 15-second chart. Watch it get above here, closed above. See that? My friend was over yesterday and he was saying he watched our videos and he thinks that we're too close to the bark on the trees. Do you guys think this is too close to the bark? 15 seconds. We're going to miss the tree. You know, when people say you don't see the trees for the forest, and he thinks we're in the bark, which we are, very much in the bark. But the one thing I've been preaching here is all this stuff is fractal, man. It's fractal. What you're seeing here is just a mere reflection of what happens on all time frames. So if you're a higher time frame trader and you're watching this, you're going, this is crap. I can't do this stuff. It's way too crazy and it's all over the place. It's not. What you see on those higher time frames is what we're looking at here on the lower time frame, but just faster. It's just faster. The same setups occur on this 15-second chart. So yeah, this is for people who want to watch and study time, the algorithm as it's going. And you know, you don't want to wait on a daily candle to see if this breaks that high and then comes back, finds support at it, and keeps going. 15 seconds is going to give us an indication of what we're looking for, so that when you're using this on a 1 minute, an hour, 15-minute, 5-minute, doesn't really matter. All these setups are still going to be the same thing. It's algorithmic, otherwise it's wrong. If you can't do this on all time frames, it's not right. So this is just showing you a study that's a little faster for us to understand the concepts a little quicker, instead of waiting, you know, 6 weeks for these candles to form and go, okay, yeah, I did find support off that order block. I had to wait a week for that to happen. This is just a 15-second, and we want to see if that continues to provide us a level of movement. So yeah, you're right, we're in the bark, but you're studying price algorithmically. What you see here happens on whatever time frame you're trading on. It always, always, always occurs on all time frames. Now you want to see it get above that candle right there. It's got to close above there. I like the fact that we've got above this little imbalance SIBI combination. If you trade below it, then we're stuck in that consolidation again. So we're still finding our support. Traded above it, came back, actually traded below it, came back up through it again, then came back into it one more time right there and went higher. Did not take out that low with a close, so that gave you that bear trap that we look for. Does it trade below it? Then we're probably going to go lower, extend the range. We came right back into the rejection block. It did not trade below that, so that's your confirmation. When you're in a tight little range like this, you want to see that get taken on the downside to confirm that you're going in that direction, kind of like this. You want to see the displacement above, come back, find support at this, and then start climbing higher. So this is the displacement you're kind of looking for on one side or another to confirm a higher time frame objective that we're still aiming for. Yeah, he's a trader. He's really good, man. He showed me his account, like his live money, and he's up 400 and some odd percent. Like I kid you not, he's doing really, really well. And all the power to him. I think he's doing a great job. I got him into ICT stuff back in 20, I think it was 2020. So he's been doing it for 4 years or something like that now. But he's been utilizing it, and he trades banks, and he's been killing it in banks. And I'm so proud of him, man. I think it's such an awesome thing. He's done a great job. But he's come into our show and watched, and it's like, man, you're way too much into the finer details. He likes to trade banks on a day to day. Like he'll catch it on a short and then sell it again at the end of the day, or a few days later he'll catch the low inside a range. And he's bumped his account up like insane this year. So I'm super happy for him. Super happy for him. So I'm glad he's utilizing Michael's material, and it's manifesting in his life. And I wish him all the best. Like seriously, he's doing so well. Hi Darren, I got home late from work and didn't hear the start of your stream. Do you have an upside target in NQ? Yes, I do, my friend. I have an upside target. I'm looking for this imbalance and that fair value gap. I'd like to get back up in the air today and tomorrow. And this imbalance, I'd like to see 12 turn right in here. We got 11, 12. I'd like to see a 12 create a high, a 12 candle, and then 13, 14, 15, 16, 17 are going to be delicious runs down if we get 12 as a turn. So that would tell me that 12 o'clock or 12 o'clock, the 12 candle, the big run down would be right through this. So you'd be looking for a days of running down if it's algorithmic, right? Holy crap, man. Okay, I have to move my stop loss way into some profit here now. We got in down here off this candle here. Is that the level? Is that? $603. Oh yeah, right here. No, it's not 603. That's where my stop loss is. Well, I got in at 582. 582 right down here off this fair value gap here. That's my long, and my stop loss is sitting right here, aiming for up here. And I got 4 micros in this. Look at this delicious run. Are you enjoying this, folks? Are you enjoying this little run? You're going to start to look at those numbers and those candles now, and you're going to start to say, holy cow, you mean to tell me that I could take from 12 and I could expect 12 to create a high, and then from 12 to 16, 15, 16, 17, 18, 19, to get all the way down into here, you could literally catch the 12 on the reversal tomorrow, and then see like 3 days, the rest of the week, just this big run back down into this range inside there. And for you on a daily basis, that's like 21 all the way down to 20. So there's like almost 1,000 handles. Will you guys be happy with 1,000 handles? Now you'll start to see those numbers, the number game, and how to utilize it in your daily trading. Because we got a 10 turn there. They expect 11, 12 to do a reversal. Remember, 10 ends the run and then starts a new run. I should have put the trade on here so you could have seen it, but it flies against what we're doing, right? I want to see you guys find your trading method, staying inside or on the horse, as it were, inside old highs, wick, return, wick, all these wicks, stays open, breakaway, fair value gap. So the 1003 candle I gave you for the silver bullet, there's your silver bullet. Now I want to see it run to here before 11 o'clock. I like to see that, take that out for 11:12. Remember, you're thinking about hours now, 11 and 12. 12 o'clock, you want to see a peak and then the return. Which, if you go from Greenwich Mean Time right now, on the hourly basis, let's go over here on the hourly. There's 0, 1, 2, that's a turn, 3, 4, 5's a turn, 6, 7, 8, 9, 10. Oh no, that's midnight. Is that the midnight candle? Yeah, that's right. 10. So you're looking for this to create a new high. 10, push, push, push. And if it just keeps going 11, 12, and then we get the reversal at 12, that'd be great. That will put us right back up into that, up near this order block here, inside this range from hourly, from that high to this low. We're looking for a run back in here. You're looking at 70% optimum trade entry. So your fib tool is, we're at 62% right now. So move your stop loss to 50. And then you lock in some profits and then watch. This is what I think somebody had mentioned this last week. I don't remember who it was. And thank you again for your input when you were talking about making your entry on the 1 minute. And I was saying I have to learn how to hold these longer. So entered in on the, mind you, I entered in over here, entered in on the long here, and then go to your hourly chart and manage your trade. So 50% pulling that profits to here. So my profits up in here, and then 62%, you can take a portion off there. I'm just going to chase this up now. So if we hit 70%, I'll move to 62. And then if we can keep reaching for that higher target for the daily, that'd be ideally where we're looking for that to go. And look where the daily target ends up, right on that level we're looking for. The bottom of, or the top of the fair value gap, the bottom of this wick. Right there. That's the fulfill of that range. And that will be a, how many handles will that be? 52 to, that'd be 316 handles. That'd be a nice little run for the day. That would be my record holding a trade. And keep in mind, 11 o'clock, we tend to see that reversal run back on us in here. And we've got a little swing point going on there in the 15-second chart. This is the turn, but we did not break this low. So watch how it acts inside here now. So how we've returned back into it right here, right there on the tip. We take out that on a close, then we have a reverse into this range here again, and then look for 50% of that. And then if you take out this swing here, then we've got a deeper return into the range. And now we've taken out that right there. That's it. It just took me out. That's my fail safe. It's a nice 100 and almost 130 handles. Bad for a little run on the day. So you see how we saw the reversal coming right now? Look at that range. So that's why I didn't want it to come any lower in here. We get a body trade below it, then that's my fail safe. That trade's over. Now we'll see how far down into this range it goes. Thanks, Campione. Yeah, that was great. See that 62% right there? That's like ideal. I didn't take a portion off there, just moved it up to 50. And then I went, okay, where's my failsafe going to go? Failsafe will go right here. If it trades below that, which it does right there, then that's my reversal. I'm going to stay true to my setup. And now I'll wait for a low to get taken again. And then wait for a new reversal for me to continue running for a higher objective. So you could catch a run up, wait for this to come back down. Or if you would have caught that little reversal that we saw right here, or change in direction, confirmed reversal change. And notice how we haven't traded back into it yet. There's a small gap right here. See that range we're talking about from here to here? Oh, it is snowed like crazy here last night. We were all nice and clean. I finally got back from Manitoba, so I'm glad we got 13 hours of driving under our belt on nice, clean, dry highways. Because right now I can hear all the snow blowers going out there. It's a bit nuts. I hope that's not my wife out there using that snowblower. Stand by. I feel like someone's in my driveway. Hey. Oh my God. That's amazing. There's a little old guy out there with a snowblower blowing the whole sidewalk out. He's come right up to my front door, just cleaned it all out. He's done my driveway. Oh my goodness. The kindness of some people. I don't even know the guy. And he just came by. I guess he's on a run. That's awesome. Good for him. God, the guy's like probably 10 years older than I am, 20 years older than I am. There's a little old guy out there smiling away, doing his things, waving away. Oh, bless your little heart. Okay, so we've got a run above here again. That's great. I want to see us obviously clear out that high there and start continuing back to the upside again. I don't want to see it just run back up into this level here like it just did right there. Just popped up above here right on that number 42 candle. And if 42.45, check 42.45 here. Look at this low here at 40. What a beautiful little swing there. Hey, at 40. Right back into that little fair value gap below us. 42. Is this on a 15-second chart, you guys? This is still using the 1 minute chart, but you know my point. See how I wanted to see it break that high? We didn't. We just transferred back up into here. Now we got to get, where's our, we've traded below this level here already. And now we've got another, it's not a swing, but it is a reverse or change in direction inside here. So from there to there, you're more than 50% of that range. So now you want to see it climb above here and start using this as leverage to go higher now. I want to see it get through here. And I'm looking for, let's move this here. I want to see it get above here. Oops, I have to include. Michael says include the imbalance. And there's a small little imbalance above you that's right at the mean threshold of that last up close candle. So you want to see it get through this and that on a close and start climbing higher. If not, I'm not touching this just yet. I'll wait and see. Yes, that's my upside objective right now. This is being lost in the woods, right? You may just say, you know what, if you would have just left it alone and put your stop loss down here and aim for that, you could have reached the whole thing. But this is my micro trading versus macro trading. Big D says, hold my beer. Are you seeing the inversion fair value gap on the daily, or am I imagining this? This inversion fair value gap? Yeah, that's exactly where I'm looking. Craig, or Derek, sorry, is this inversion here. We've run through it. I like this imbalance above us too. So I want to see us climb above here now, get on top of this, and then start using that to leverage higher. And we're coming into that 11 o'clock window, right? So 11 o'clock window, we could look for a dip down in here and the 12 o'clock to make the swing low. And then the continuation from lunch all the way up into 16, 17. If that makes sense to you guys. Greg, go tip him. I think he's in my neighbor's one now. He must be he must have got a new snowblower this year, and he's out giving it a try, walking around the neighborhood, doing his Christmas deed. I hear these things starting to run out of gas. I hear burr, 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 burr. I'm gonna have to return the favor with my snowblower. Find out where he lives. I'll just follow the trail back to his house that he's carved in the snow. Bless his little heart. It would make sense for high tomorrow, as Tuesday usually makes a high or low for the week. Exactly, Joey. Exactly. That's the thing we're looking for, right? So if we see today is 11, 12, but I want to see 12 just get above here. I like to see tomorrow get into that little wick there, creating that wick, and then Wednesday come back up to a portion of this, and then go lower on Thursday, Friday. I like Thursday. You've got full permission on Thursday to start a ripper. Even Wednesday, late Wednesday, start a ripper all the way down for the next 2 or 3 days, taking these lows out. That's what I'd like to see. It'll be like 3 or 4 days after that. So it'll be for at least for the rest of the week and into next week. So here's my advice to you guys. On your calendar, share with you the calendar. For example, on June, I don't know if you guys can see this or not. Where's my camera? Oh, right there. Oh. Right there. Can you see that? I'm trying to move it up a little bit slowly. There's a slight delay in the camera. So anyway, you'll see on here, there's the dates. I will write down on there what. So circle on your calendar, write the numbers that I taught you in the time of the bottle. Write that on your chart so that when you look up and you say, what day are we trading in? What day can I expect a turn to occur? You'll see, well, when I'm looking over here and I'm looking at my calendar, I'm looking at what day the candle count's coming on. And that'll give you your indication for your an idea at least where you can expect time and price to change. Does that make sense? So you guys can use that to write on your calendar and then circle enough times in the month, just circle which days were correct, which ones actually saw a turn. You saw a turn on there. And then through the course of the year, you've got a whole calendar that you can now look back through your calendar and go, yep. It always seems to work. And then on the seasonal tendency, start circling like August 21st, the 3rd week of August after that big run. It's a 21 candle day or a 16, 17, 18 candle week. You watch how the markets do a turn around that day in August. British pound got down to 126.22. What did I say it would get down to? I said 126. I think I said 126.16. I can't remember when I'd said that. And then we've had a big reaction off of that order block at 126.22. Traded above 126.27 and then traded back inside it and then went higher, took out those highs now, and it's still going higher. See how this is not giving us any chance, any indication that it wants to go higher or lower right now? It's just sitting flat, and we're getting into the 10:30, 10:50, and now the macro begins at 10:50. This dot here should be on top of that dot. That's the 50 candle. 52 now. The next macro is going to begin. I like the fact we just traded a body above this, came back and gave it a little tap. There's a little fair value gap right here. It did take out these lows right here. And then we've traded above, give it a tap. Now I want to see this start really marching through this level here. Came back, tapped it one more time. I like it tapped the high right there. That's nice. I'll get a kick off of that and start going higher. What are we at? 52, 53. So we got 55. G's going up. What do you got for oil there, Craig? See how we traded below here? Come back in, find support at this. Gonna go lower. Took out these lows. You want to see this get above here again now? You see how we got one that's going to go higher and this one that's going lower. We found support off of this. So now you've got one going in one direction, one going in another direction. So you got to wait for the highs to get taken and the range to extend and then key off the high or the low. If you're enjoying our show today, by all means, give us a thumbs up. Subscribe if you're new to our channel. We're here every morning. We're here every morning. Derek, Abs, Dave, and the boys are here, ready to rock and roll. In our Telegram channel, those guys are very smart, very gifted. They know their stuff. They know their way around the charts. If you need help with interpreting any of this stuff and the ICT material that you're studying, these guys are good at what they do. We got Justin and Russell and Hadi. Hadi has really picked up really well in his analysis. He's starting to see the charts pretty clearly, which is awesome to see. And yeah, they're all there available to you folks. They're always willing to share knowledge with you guys. And that's the good thing about the community. We're building like-minded people. No drama. We're not into all that drama you see out there in Twitter and all that. Just not interested. Just here to help people out, move forward. No one's here to make a name for themselves. You're just here to help people out, move ahead in the future, and try and, you know, secure a little bit more of your future and take control of the world that is quite chaotic right now. It's your turn to take control of your finances, your life. That's what we're trying to build here, is a bunch of fishermen and fisher ladies, people. You can do your own fishing, create your own wealth, create some generational wealth, help your family. See how we've taken out this low here now, come back into it. This whole range has to extend. We have to get outside of this range here. Right now we're still supporting this lower prices. We just came back up inside here. The body's respecting this. We've got nothing down here. So if we take out this low next, You can see all the heartache. You can prevent yourself once you see that run up and you see this reversal and you get yourself out of your trade, how you can avoid, especially in a time where you're expecting to see lunch hour approaching or the 11 o'clock run on liquidity. We could see another nice little dip down into here into 50% of this range. Again, we haven't really broken the lows here. No body below here yet. We're coming up for 11 o'clock now. I want to see a break in structure. I want to see these two candles get taken to the upside. Find some support at this and start pushing through that level again. You've got to get above here. Otherwise, we're just going to come back up into these candles. Find some support. We've already got in here. We're inside this range right now. So we want to see it pop through here. When does NQ turn bearish? It should turn bearish tomorrow or Wednesday. We should see a Tuesday, Wednesday high. I'd like to see us dig into here and here. Yeah, did you see that old guy who'd come by and did the driveway and everything? Who? Glenn? Can't stand it when she talks from another room. I can't hear her. She's got one of those voices that kind of the words come out and go bleh, and they just hit the floor, and you look at her and going, "What did you just say?" She talks so quiet. She's got one of those soft-spoken teacher voices. Need a military girl. Yell it. He's got a new snowblower or something. All right, so there's that level. That first one taken, found support. I want to see these two get taken out. I don't want to get pulled into a reversal here, taking out these relative equal lows that are still sitting below us. We've got that high taken, this low taken, but we don't have, we've created relative equal lows below. So we've got this consolidation area, and we're still inside this big range here, or this smaller range, sorry, bigger range here. If you look at this consolidation and see how we're coming back into the midpoint of it, or the equilibrium of that range. Ignore all this, look at the range you're in and say to yourself, what have I got? It's inside here that can support price on the downside or upside. On the downside, below 50% is just sitting in here. Above 50% is this guy here. So you've got to break out through here to extend this range longer. Otherwise, you're just bouncing back and forth inside here, and you get caught up inside these traps. You think, okay, no, we're definitely going along higher. Well, if we clear out these two, then yeah, we'll extend this range back into what? Another area of potential support to come back into the range again. So if you want to get out of this range, don't try to keep betting in here and keep getting beat up in this high resistance crap that's going on here right now. Recognize that it's high resistance and wait. Yes, that's an objective. Wait to see if that actually gives us what we're looking for. You want to see it break out of here and start going higher. And you keep in mind you're coming up for lunch hour now. In the next half hour or so, we'll start to move into that 11:30 lunch hour. 11 o'clock, we usually like to see a run on liquidity, 50 to 62% of the range it was created in the morning. So we just get this big dip down into here. That would ideally would be what I'll be looking for. So I can catch a reversal off of here and start running for these equal highs. I don't want to see these get taken out. I'd like to see that roll over now and keep coming back down lower and run deeper into this range that we've created here since 9 o'clock this morning. It was quite a long run. 9:30s range run for the day. That's quite huge actually. I take it from here. From that first initial last big leg up. %50% will put us right back into this imbalance, this little tiny candle here in that old high. And that gives us this, if we do take that higher, I just feel like we might want to come through here, clean this up before going higher. If it's got intentions of getting up higher here, this should hold, and we might see this just climb up on top of these candles here, find some support at that, and then I'm looking for these ones. I want to see a big displacement candle come back, give this some support, then you can get back in sequence and back in sync with the market again. So now we've got a body above here. You see that? Find support. I like that. Body above. I like it. Look here. I'm referring to this one right here, this November 7th one. This is one I'm looking for. Just trading inside the, I'm just inside the range here. And because we're at above 50% of that range from here to here, abs. See that? We're above, we're hitting 50% of that range right now. I want to see that run back up inside. We're inside these big bull candles here. And now we're retracing. I'd like to see us take that high to that low. And you're coming back into 50% of that range, or at least this imbalance here, or that candle there. We have a reversal that's occurred. We've got a new high that's been formed. We've got a nice body that's retraced back down to it. I'd like to see this come, and we did not take out this fair value gap with the first candle. If this candle rips through this and this we take this one, not that one, as support to go lower. If it rips through this, it just goes through right through all of it and takes out these two candles here as well. This is the candle I'm looking at finding support on to continue going lower, not way up here or here. That's just a big bolt displacement. They want to leave that open. So we have not taken that candle on the low in one candle, and now we're retracing back. So I'd like to see the high imbalance or this one more time before going lower, if that makes any sense. Fair value gap from Friday the 11th from 10 a.m. just inverted. See how that little level right there kissed it nicely, and then we'll come back up, give this a little kiss again. I don't want to see it rip through here. No shenanigans, just get going. Yeah, that's the one I was looking at also. Good. That's my theory anyway. So I'm using this 15-second chart when you talk about being in the bark, as my friend had stated. You know, this is just what this I'm looking at here. This is what I'd be looking at if that was a 15-second chart. That's exactly what I'd be looking for. It's a 1-minute chart. I'd be looking for that as well. So all I'm doing is just playing out on a daily chart the same thing I look for on a 15-second chart. And if you look at your charts that way, what we're learning here, what we're talking about here, and you expect to see the same things on every time frame. So no matter what time frame you're on, I think what I'm trying to say here is it doesn't matter what damn time frame you're on. What's your strategy? If your strategy is only working on one time frame, rethink your strategy. It is not a fractal strategy. Rethink it. You say, well, no, this thing works pretty good on this. Sometimes it fails, sometimes, but on a 1 minute or 5 minute, it works great. But on 15, 20 minutes, it's not so good. It's not fractal, man. You're gambling on a possibility that the algorithm's going to roll over you. Everything always passes. Like a clock is always correct. It's 6 o'clock, at least twice a day, right? So you don't want to look at that as the algorithm sometimes passes over. That's why I hate those moving average things. Can't stand moving average. I built bots around moving averages, and they just don't work. You know, some people believe they do, but I tell you, I could take a moving average now based on my crossovers and my reversals, and I could take a moving average and I could make it work based on moving average or the reversal pattern. But then I go, why even have a moving average in there anyway? I'm just looking for ways to make a moving average indicator work. When if you study price action and stay in the chart long enough, you'll see where it's working, you'll see where it's failing, you'll see where it's turning, and moving averages won't give you that. How many times have you seen a moving average cross up here, then all of a sudden the indication that it's crossed over occurs way down here? You see the crossover happening up there, but the candle's way down here, and you go, wow, look, yeah, it showed it crossover up there, but the entry's down here now. It's like, well, you've missed all that opportunity. So anyway, my point is time of your setup only matters if you can run it on any time frame. on any time frame. And if it's not, rethink it. Unless it's super successful for you, then who the hell am I talking out? Talk out of my ass. Who cares? So I went long off of this high again here. And I'm going to move. As soon as it breaks this high here, I'm going to move to break even. Why is that not coming up there? These guys are not letting me move my stop loss. Okay, there you go. All right, so now I've taken that. I moved to break even. Now it's a zero stress trade. So where's your fail safe right now? If you guys are, let's say you guys are in on this trade, where would the fail safe be? Give me a price point based on this chart. Where would you put your fail safe? Just type it in the comment thing on the side there. 696. 696 is your failsafe right here. Okay, interesting. That's just below 50%. 696, your failsafe would be hit. Look at the range. Look at this right here. If it pops into that, there's the reverse or change in direction back into premium discount array right in here, right there. See that? It's already hit that little box right there. It's at the bottom of the box right there. Now I want to see that reverse and come back up again. So my failsafe is sitting right below here. If this runs below here, we've got a change in direction and a swing low, and we have a reversal with a swing. So it's not just a change direction back inside this range to a discount array. And see how that, it just came down and tapped me there. So I was in just below here. So I was like 15 bucks or something there. So that's where my failsafe would be. Your 696 or wherever it was you had, perfectly fine. Look at this candle here, this last up close candle. Another failsafe or another idea saying it's going to come deeper into this range is if you hit the high there and you don't bounce off of it and take off right away, you just hit the mean threshold. Then I'd say once the mean threshold has been taken, I don't like to be in that anymore, just because that's the area of sensitivity you want to see right there at 697. So 696 is a good call. That's usually where you like to see it come back to the 697 and then leave from there. So 696, one handle below. Nice. I like it. But usually use that last big up close candle there, and the bottom would sit right there at 693. You want to be one tick below that. And if it takes you out, then you're on the wrong side of it. And then you've got this little imbalance right here. See how the bodies right now are sitting right flat to that candle's high right there. See how they're just bouncing off of it? Ding, 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 ding. And this guy here just traded below it. We're coming back up inside it. Stop loss My failsafe was right here, and whatever that little spread they had is in there, and they got me there. Literally tagged me out right at my failsafe. And now we're coming back into that range again. So now what I want to see is I want to see a return back to this consolidation for a CAM1 model to get through here. If we get through here, then I'm looking for this level here. If we get through that on top of that, find some support at that, then look for higher prices again. And it's Monday, so I'm not giving back on my profits. I will put it on here. There's the trade off of consolidated CAM1 model, and I'll put my stop loss down below here. CAM2 would be right there. You want to see this stay, a portion of this stay open, so that's your indication of my bullish. If I leave this portion of this last fair value gap open, so we just came into it and leave a portion open, that's what you want to see, and you want to see that start climbing up out of here now. If it fills it in, it starts to lose its luster for me. Pull 50% of that for a CAM2 model, which would be just right there, right there. See that? That is the full close. Yeah, they got it. Don't like that. So now you want to see you don't want to see a body close below here now. That right there is your line in the sand. So now this will go right here. I don't want to see that get any lower than that now. That's a CAM2 entry. So you don't want to see that come back into that level. It's already hit it right there. So do your thing. If you come back through here again, I'm not interested. That's precision. Takes out that high right there. Pay yourself. Move to break even. I've only got one on there, so I'm going to move to break even right there. Actually, no, I'll just keep it back here. Did it take me already? Yeah. Oh, well. I was going to give it back here. Leave it there. Now you want to see it climb up out of here, not just a wick above that high. See how it's just come back into that range, hit that high, and we got a reaction off of it. Now we're back into this guy here. I want to see this provide support, which it's doing. And now you want to see this give way on the upside and take that candle out. And my coffee is working very well. So I'm going to go for a quick pee and I'll be right back. Keep your eyes on these levels that I just discussed. I'll be right back. Well, we are back. Looking for that upside objective again, still. So if we're seeing this, this is what we were talking about before. So now we've got this swing. We took out that low there. We got a reversal. You come back into that. So you take the imbalance all the way down to that first candle's high, first bullish candle's high. We've reversed back into it. And now if we take this candle out with a body, we come back, find support at it. We want to see it start getting some legs and getting up here. Otherwise, you've got another reversal starting here. This little imbalance right there, right back up to the mean threshold of that candle. Small range, 50% of that range. So you could keep pulling your fib tool from the small range that you're in, and you've got to factor in, there's your 50%. Optimum trade entry reversal, go higher. Off that order block, mean threshold, see how that mean threshold holds price? That's the line in the sand. You want to see a portion of this stay open. That's why whenever you hear me say, oh, I want to see that little piece stay open, that lower half, you want to see it stay open. This is what Michael likes to see, is the top half of that consequent encroachment of the BISI get utilized and then go. So the best one is like right there, just gives you an optimum trade entry or institutional order flow entry drill, and then start to leave. If it comes back one more time, it loses its luster a bit more, but you want to see the consequent encroachment hold. If that holds, then you see this big bold candle rip away like that. You're going, yes, lovely. I like to see that. Continue pushing higher, take out that high, and use the next is the wick here. I'd like to see 50% of that wick get reutilized and then go. So give me a big displacement candle above, come back inside that 50% of that wick, and how it lines up with the equilibrium, with these equal highs here, and then continue pushing higher. That's what I want to see. So hope you understand what it was that we're looking at there and why those levels are giving us the support we need. I'm moving into profit now. I got in off of here, off that low right here, and now I'm sitting right here. That's my fail safe. If we lose this and lose that on the downside, then chances are we could be coming lower and running back into this range. So moving into profit and then just let it sit there and wait. Consequent encroachment. It's gonna come back and get me again, the bugger. Look at it sitting right on that mean threshold right there, giving you a little, I'm gonna come get you. I'm gonna play chicken. Are you gonna, am I gonna take you out? Nope, not yet. So right back to the mean threshold of that small range right there. This is the last bearish down close candle. It's drilling into that mean threshold now. Ding, ding, ding. Is it going to hold? Or is it going to come back and get me? Yeah, it looks like it's going to come back. It got me. So there's the break in market structure to the downside. See that? That's my fail safe. Now you might want to have said, well, my fail safe is going to say, as soon as they take out, we got that little reversal there. As soon as we go below that, I'm out. But then you have to think about, is this the bear trap? If that would have just came to that candle right there, it's open, and then reacted off of that, went higher. That's ideally what you want to see. You don't want to see this bang, bang multiple times on the mean threshold, eats through it, takes you out. Then you think, okay, we're going lower. So it's a good thing I didn't hold my stop loss sitting down here, because that would be under pressure and I'd be underwater right now instead of making a couple of bucks. So that's where the fail-safe can really save your ass, right? So from here to here, look at this. If it trades below here, we're going to go lower. Look off here. Now you've traded back down here. Look at this candle here for a continuation on the downside. You see it run back up into that candle's low. Right there. Right there. Bing. Hits it. Now you want to see if this candle right here holds price. If it eats through the whole candle on the other side, look for this candle to find support to go higher. See how we've got this is already traded above it. We've taken out this low and this low. So you got one that wants to go higher and this one wants to hold it to go lower. So when you have competing directions, wait. So here's you're inside this range here now. So right now this one is, we're trading above this. So I'm looking for this to go longer inside this range now that we've cleared out this high and we've taken out that wicks high right there. We're through that, we're back into that range again. Get back in sync with the market. I want to see it come back to this candle here. All we are is just inside this range here right now. So if you really want to see it confirm that it's going higher, you want to see this fair value gap here get taken on the upside. Like this. Hit that level that we're looking for. That's the level we're looking at, and I want to see that start going higher now. It starts eating through this candle. It loses its luster for me if we get through the wick bottom. And you got that little imbalance right here, this little SIBI. We've already traded above it and into it, so I wouldn't want to see it get revisited. So as long as we stay inside this candle and start going higher, I'd be okay with that. And we also have support with this inversion here now. In a 5-minute bearish order block from Friday, 9:45. It's interesting to see what it does now. Interesting how it's a 45 candle, hey? Do, do, do. Yeah, I don't want to see it drilling into here again. I just wanted to see this start lifting out of here. This is not what I want to see. Right here. My wife went to that Bruce Springsteen on the weekend. Absolutely loved it. She went to see him back in the 90s And then again, she saw him on Saturday. Loved the concert. Said he was amazing. As good as he's ever seen him. Or she's ever seen him. And it's funny because she watched all his the documentary based on his new concert, and so she could see that. But they watched that before they left for the concert, and they said it just made the concert so much more real as to why they were doing it in the first place. And see how we broke this high here with a body. You come back inside the mean threshold of it. This is a precision, you guys. This is the kind of precision you look for. You hear me talking about it. It's just beautiful. It runs up, extends this range. And now we're digging into this fair value gap above us here. Trade above it. I want to see that find some support inside here now and start marching higher. You can come back and kiss this right here. Hold high. Just march on out of there now. Again, if you like this kind of level of precision and you like to see this kind of price analysis, you can do me the kind favor, just hit the like button. Just lets me know that you appreciate what we're doing. Doesn't cost you anything. Just lets me know you like what we're sharing here. I'm just moving into profit now, so I'm just because it's such a high resistance right now, I don't want to take any losses today. So now I've just moved into profit and then let it run. I'd rather sit there with a zero stress trade instead of worrying about all this high resistance crap going on here. It's still working the way we want it to work, but it's really taking its time acting off of our arrays we're looking for. So $30 likes. Thank you so much, folks. I appreciate your kindness. All right, so my stop is sitting just below this. I don't want to see this get revisited now. We've hit it enough. Let's get the hell out of Dodge. See how the bodies are still in that upper portion of that fair value gap there. I saw Bruce in 1978. Ooh, 78, 75 years old. Yeah, he did an amazing job. She said she just loved it, the concert. And she said he had lots of energy. He wasn't sliding across the stage like he used to do. She says, but he's looking trim. He's a little wobbly on his legs. But she said, 75 years old, he sat there. She goes, it takes 3 hours. You know, think about the guy has to work out for 3 hours and strum his guitar and work that guitar and then run to one end of the stage and chat with people or high five people and then run to the other stage. He literally went all over the stage. Went to one side, to the other side, the front. He went even to the back where there was only a few people watching back there, but he went and sang to them anyway. Like, what an awesome guy. That's just amazing. Much respect. Look at this high here. I like that. That mean threshold, that candle. I don't want to see that give way now. I want to see this high hold. High hold silver. And keep coming. December show played Santa Claus is Coming to Town. Yeah, that's what they did in Winnipeg. He played Santa Claus is Coming to, just the whole place just lit right up. They loved it. She didn't tell me if he played that on this concert or not. See that candles open, come back to it. That's what you want to see. Just come back to the candles, the order blocks open, and then start marching back up again. This is a nice reaction off of that. So I want to see eat through here now and start taking that candle out on the upside. There's a small imbalance right here, which is what we've come back into, traded above it. We ran this one for a long, this guy here for a short. We'd have to take out that low for me to start getting concerned about coming back deeper into this range. So I want to see that start to really pump up above here now. This mean threshold has to hold price. Let's go to hold it right there. And we've tapped on it twice. My stop is sitting right here now. Move into profits, and I'm not going to give up anything there. So if it comes through that mean threshold, which is, I don't like this double tap, triple tap now, we're in through it. So that's probably going to come through and take me out now. So I'm closing off my stop, my trade. I'm not even going to give it a chance to take my stop loss. I'd make a bit more profit. So they would have taken my stop right there. So now we're looking at coming back into this range a bit more. Dave Barry, I'm out of here. Have a great day, y'all. Take care, Dave. Good to see you, buddy. Thank you very much for tuning in. Now we've got a low. Watch this candle here. A little cluster right up to there. And roll over and come lower. We're inside this range here now, so you're looking for a run into this candle's mean threshold. If we eat through this candle here, get on top of that one there. Did I just get my stop too close to the, there's the 50%. I would have had my stop loss too close anyway. Didn't realize that. So just dip below 50%. And now we're looking for a run above here, find some support at that. And you want to keep going now. Still owe you all my fib explanation. We'll provide it this week. Good. Thank you, Derek. Are you out of here now too, Derek? That silver bullet this morning was just a nice little, where's the 10 o'clock? 9, 10. Always on the 1 minute. 10 o'clock silver bullet this morning. 9, 10, 10:01, 10:02, 10:04. Come back. There's a silver bullet for a long. I love how this candle trades above the consolidation. And then you get your CAM model entry, CAM 1 for continuation. Those are your CAM people. "15-second chart. Let's see what's going on here. See how we traded below it, came back up inside it right there. Continuation on the downside. We took out this little high here into the rejection block. First indication that we're changing direction right there. We traded below it right there. Came back, give it a little kiss right there, kept coming lower. And you want to say, what have we got in here that's in a discount? We don't have one on this side. So the only option you have is this candle here. If you close that on the downside, then we have the continuation through here, which is what we were looking for. If it failed, and it did, came back, found support, get back in sync with the market, and you're back down into this candle, this little space right down in here. And that's exactly where we're hitting off of right now. Oh, yours goes way back. Okay. All right, so we're looking to run on this for 12 o'clock now. Lovely, lovely. Now we're just looking for any opportunity to see a reversal. We're coming into that 12 o'clock window. Gotta go, D. Thanks for everything. Lunchtime. That was a nice silver bullet. Yes, indeed it was. Thanks for tuning in, Abs. See you, man. We'll see you tomorrow. Okay, Hans. Enjoy your night. Enjoy your dinner. Take care, Edgar. See you later, Russell. Watch over here. That's what Michael talks about in terms of 11:30, between 11:30 and 1:30 for 2 hours. There's a measure of retracement back on the range that's created in the morning. They like to run back against all the people that are trailing their stop losses up behind you here. And here's your 11:30. Here's that very thing that he talks about. You can remove all this stuff here now. And we saw this happening way up here. Right here. We talked about this before it happened. We want to see if it took out this low here, we'd be in trouble. And it took that low. Then now we're looking for a continuation on the downside. We have a break in market structure to the downside. Oh, sorry, not this one, this one. We have a break in structure to the downside. It traded back into it right there with precision. That gave us the indication. Those who are in the bark in the forest happened to see that we saw this way before any of these guys saw that this wick was forming here, and we have a retracement. We understood that at 11:30-ish, between 11:30 and 1:30, any range that's created early in the morning, and we've had quite a nice little run here this morning, that we're going to get a measure of retracement back against all these people that are trailing up behind us. And we see it right there with a level of perfect precision at 7:11, right back to that candle's close. Right there. Its candle, the candle's close is 7:10.75. And this was a high of 7:11. So 0.25, just enough to keep your spread involved, and you would have had a perfect entry for a short. For continuation, take out that low now. On a close, came back up inside that candle. Continuation on the downside, and you don't get any more chances to get filled on those. And down she goes. So now we've got the 11:50 macro. I'm just looking for an opportunity to see any reversal now. Right there. Inside this range. %of that range. There's 50. So the bodies respect it here. Just popped above it. You come back inside that little fair value gap there. You want to see if that continues to extend beyond that. Now. So far we've had no body break above here. Now we're eating through this candle's low. We haven't closed below it yet. I want to see us close below here. It's got to close below that to keep coming lower. It did. You have an imbalance, mean threshold. There you go. Continue coming lower. I'm out of here soon. I like that. Reverse. Watch this candle here. Tap it. Start coming higher. I want to see this break structure here now. We're inside this range. Now we found support at this. I want to see this come up here. Break structure to the upside. Now that you've traded above it, you don't want to see this candle get taken to the downside on a close. Right there would be ideal, just to see it tap that and start leaving. I lose my luster when you start getting into the mean thresholds, the line in the sand right there. You want to see that hold. If your line in the sand, if it starts to dig through that or deeper into this range, you're back to this has to hold price then. But I like that for support right now. The mean threshold. That's the last bit of love for longs. That's what you gotta love. Come back into this candle. No body above there yet, and no body above here yet. Wait for a body to get above here. This is just looking good for recycle that back into this change in direction. You want to see that keep climbing higher now. We want to see a body close above here. There's your body above. I want to see this continue going higher now. 12 o'clock. Swing. This could continue coming lower on you now. That could be the swing point for the 12. It does like the midnight open. Now I want to see if we can get down into this level one more time, or if we take this low out one more time. And then go higher. I want to see these two candles get taken to the upside now. Lovely, lovely. So that's I want to see this continue marching higher now. Well, I think that's going to be it for me, you guys. I want to see this continue pushing higher. I don't want to see this low get taken out again. You see a portion of that stay open now. You see that? That's why I drew the, you want to see this stay open. You don't want to see it fill. Not what you want to see, right? You see it fill, open, and dash down. So that's back to that. We're going to take one more run on low here for 12 o'clock. We're back into this level here again now. Dipped right into here. Now I want to take this candle out here on the downside first. And then you want to see a market structure break above that high. This could be your first level of support to see it get through here, because there's nothing really up here that would really hold price for me. I want to see this take out that low. Which low is that? This one right here at the 1156 one. I see that low. I want to see that low get taken and then create a reversal in here. And then you have to find a reversal with support, not just a simple change in direction. You want to see a reversal, a swing reversal would be above here, like a break in structure. So if you see this and then it runs and gives you a couple of little, creates a fair value gap below us, trades through it, comes back into it, then you're looking inside that range. Then you want to see this. If this creates one below here, you want to see this consolidation, get taken on the downside, come back up, hit some consolidation for a CAM 1 model, CAM 2 model, or a CAM 3 model with a leg that comes down, takes out that low. So I'd like to see this consolidation now produce a leg that comes down with a fair value gap in it, trade through, come back, and you have a CAM 1, CAM 2, and 50% of the leg that's created in here as a CAM 3 to continue coming back up in that range. That's what I'm looking for it to manifest. So I'll stick around for a few more minutes and see if we start getting that as a manifestation of price action. And then I'm going to go spend some time with my wife, with my girl. It looks like it wants to do it, doesn't it? It looks like it wants to go, okay, let me give you a big displacement leg down there. Take out that low, create a little fair value gap. Well, that wasn't exactly what I was expecting. There's a little imbalance right here. That wasn't, I was expecting more of a big drop below this low. We've got this low taken right here, imbalance. You don't get it, look for this one here, or these relative equal highs to get traded back to. Now we have a candle inside this range. Not what I was expecting. but an imbalance nonetheless. So let's see if we get back into here, find some support at this right there. Now we'll see if that holds price. You want to see this stay open, or a portion of that stay open. You do not want to see a full eat through on that like that. We're back to that imbalance that we looked at though. Tap it. Now get the hell out of Dodge. That's your line in the sand for a retracement back into this, because we never got it, right? That imbalance, you never got it. So now it's come all the way back to fill it. So now if we go through it, we're going for a lower run here. Then you have a conflict. You have one that wants to go low and then one that wants to go high. So we literally came back and tapped it there. You want to see this really start to pop above here now. Nice. So you can't discount these little imbalances as well. What I wanted to see was one of these kind of things happen. But it said, yeah, I can give you one of those, but in the form of an imbalance. And I'm only going to take out this low. I'm not taking out that low. But I'm giving you an indication that I'm going to create an imbalance. I want to trade through this. It came back, tapped it. You go, good. Now I want to see it react off there. No, it keeps driving through. Okay, what's it aiming for? A fill of this one? It does fill that. You go, okay, now it's through that, but what's it aiming for? That imbalance we talked about. Hit it. And now you say, all right, well, if that's a retracement back into balancing that range out, and now I want to see it extend, it's got to get back through here. So it does right there on a close. Now it comes back. You want to see this provide a level of support, and now we want to see that go higher. We have a body above here, comes back. We got a body above here, comes back inside this candle. You want to see a body get above here now. Welcome to lunch hour. You can see where it's inside here now, off this candle. There's an imbalance here. We trade below it, back inside it. Look for this candle to take the low. It does. Trades back inside that candle. Continues coming lower inside this objective now. We're stuck inside here, but it is showing us that it's still acting inside that way. Okay, that's it for me. I'm not giving any profits back. This is not really giving us the nice clean price action we got earlier this morning. So it's a Monday. If you've made some money today, move to the sidelines. Let's just wait for the afternoon, wait for the 1:30, 2 o'clock, which is the 16, 17 hour, 14, 16, 17 hour. Wait for those 16, 17 candles on the hourly to start turning. That'll be the 21. You count it right from London or from yesterday's open or change of day. In Greenwich Mean Time, it should be around, so this is the 16, 17, 18 candles. Remember those ones that should go up, or the 17, 18, 19 candles, the ones that go up and down. That's where we're sitting right now. So you want to wait for the 2021 candle, which is about 2 o'clock in the afternoon. That's where we expect to see a higher low form, if that helps. So watch for those, and I will see you guys tomorrow. I'm going to spend time with my girl. Thanks again for tuning in, you guys. I know you got lots of people out there you can watch, and I enjoy spending my time with you guys. So thanks again. I appreciate every one of you that tune in every day. I hope you learned something. I hope you got a chance to see how to stay in price action, when to see when it's switching up on you. And don't give up on days like this or hours like this. This is a great time for you to practice knowing when it switches up on you, like reverse, switch up, reverse market structure break down inside this range. We've got this guy here. If we close below that, then we're going lower. We close below it. So we went lower, extended that small range back into this one, traded below that imbalance right there, extended the range again. Now we're looking for this reverse. Now that you've taken this here, you got a small reverse here and here. We trade back into it right there. Now we're looking for this continue going higher. And we finally took out that low at 11 o'clock. So I want to see this structure break here, and then start getting up a little higher. I wanted to see this happen off of here. But we're marking time now in lunch hour. So keep your eyes on that. Look for this structure break with a nice displacement candle, not just a little creepy above it. You want to see a nice displacement candle come back into it and keep working. And ideally, you want to see another one break above here, because all you are is between this range here and this high, this low. The bull trap is if it doesn't clean this out with a nice displacement candle, use it for support to go through these highs here. If it rolls over and comes back down one more time and eats through this, this candle 643 on a close, then you're going lower again. So until I see you tomorrow, best wishes, take care, happy holidays, and I will see you guys tomorrow. Thanks very much for tuning in.